All right. Okay, good morning, everybody. I'm sure you can all hear me because I can hear myself. And hopefully it's not too loud. I know it's a little warm in here, and I have asked them to see if they can turn down the air conditioning. So hopefully they'll accommodate us so that the air remains fresh in here. So thank you for coming. We've got, on behalf of the Division of Retirement of the Department of Management Services, I'd like to welcome all of you to this employee retirement seminar. And I'd also like to thank you for coming, because I think you've taken the first step in making sure that your transition into retirement is a smooth and easy process. As you go through this seminar today, you'll learn a lot of information. There are a couple housekeeping items that I need to address. First of all, restrooms are located in the corridor behind this conference room. So if you exit the back doors here and turn to your right or to your left and then go down to the next corridor, that's where the restrooms are located. There are going to be 5 presentations today. Okay, and these 5 presentations are going to be given over the full course of today's seminar. And let me just get this set up. Here I came here all prepared to way ahead of time, and I forgot to plug in my PowerPoint presentation there. Okay, so there are going to be 5 presentations today. The first presentation is going to be by the Division of Retirement, and the presentation is going to be on understanding your benefits under the FRS pension plan. And then we're going to have a small break, and then we're going to have a representative from the EY, an EY representative from the FRS guidance line present to you on estate planning. And then we're going to break for lunch. And then we're going to have a presentation by the Division of State Group Insurance of the Department of Management Service on maintaining your state group health insurance as a retiree. And then subsequent to that, we're going to have a representative from the Bureau of Deferred Compensation of the Department of Financial Service present to you on Florida Deferred Comp. And the last presenter of the day will be the individuals from the local Tallahassee Social Security office to talk to you about Social Security and Medicare. Now, each one of you, when you walked into this room today, were given an envelope which contained an estimate of benefits for you. If you have any questions with respect to those estimates subsequent to the Social Security presentation, there will be staff available here from the Division of Retirement to answer any and all questions that you may have concerning your estimates of benefits. So with that, let's go ahead and get started. First of all, let me introduce myself. My name is Rich Clifford. I am a benefits administrator at the Division of Retirement in the Bureau of Retirement Calculations. Now, it's that section of the division that is going to provide you with benefits of estimates, and also when you're getting ready to retire, if you're doing service retirement, we're going to process your service retirement paperwork and get you on retired payroll. Or if you're contemplating retiring through the Deferred Retirement Option Program, which is what the acronym DROP stands for, we're going to process your DROP retirement paperwork and get you on retired payroll. Now, my presentation to you today, I'm going to ask that you do hold your questions until the end of my presentation. And the reason for this is I only have a certain amount of time in which to present to you. And if we get involved in questions, we may not get through the entire presentation. So I want to ensure that everybody in this room has ample opportunity to hear the entire presentation. I also am going to ask you to turn off your cell phones if you would, or at least turn them to vibrate. If you need to take a call, and I shouldn't have to say that, but if you need to take a call, I ask that you step outside the room to take that call rather than have a conversation in the room and be disruptive to other retirement seminar attendees. Okay, so let's get started. First of all, there are 3 division publications that each one of you should be reading to fully understand your retirement benefits. I'm only allotted an hour and 15 minutes in which to present to you, and there's no way that I can tell you every single minute detail of information that is necessary for you to know about your retirement benefits under the FRS pension plan. So these are the 3 publications that you should be reading. The first one is the FRS Pension Plan Member Handbook. If you read this handbook, Basically, it will tell you everything that you need to know about understanding your benefits under the FRS pension plan. The second booklet or publication that you should be reading is the Ready, Set, Retire Guide, because this guide is going to tell you step by step what you need to do in preparation for retirement, how to apply for retirement, what happens when you retire, and what happens after you retire. So this is a good publication to keep handy all throughout that process. If you are contemplating retiring through the Deferred Retirement Option Program, or DROP, okay, then you should be reading the Deferred Retirement Option Program Guide, because this guide will tell you everything that you need to know about DROP. Now, all three of these publications can be found on the Division of Retirement's website. The Division of Retirement's website is frs.myflorida.com. And once on that website, you can go down the navigation bar on the left-hand side of the page, click on Publications, and then click on Retirement Guides, and that's where you will find the most recent edition of these publications. These publications are usually updated every 2 years unless there's some major legislative change that occurs, then it will be updated, in that year that the change occurred. All right, so basically, again, what I'm going to try to tell you is you should be reading these guides. There's no excuse to say, I didn't know, no one told me. You've got the resources that you need to fully understand your retirement benefits, and I would encourage you, because it is your retirement benefit, to read these publications. Now, if there's any misunderstanding about what I've said to you today, or anything that you've read in any of these retirement guides, ultimately, the division has to administer the FRS pension plan in accordance with statute. So Chapter 121 of the Florida statutes are the statutes that we follow in administering the FRS pension plan, and it remains the final authority. Chapter 60S rules of the Florida Administrative Code supplement the statutes to clarify anything that may not be clear in statute. And then, because retirement benefits are taxable, the Internal Revenue Code remains the final authority as far as taxation on retirement benefits. Now, because it's pertinent to future slides in this presentation, I need to give you a little historical background on the FRS. When the FRS pension plan was created in 1970, it took two plans called the Teachers Retirement System, better known by the acronym TRS, and the old State and County Officers and Employees Retirement System, better known by SCORES, and consolidated them into, or merged them into, the FRS. And when the FRS pension plan was created, there was only one plan under the FRS, and that was the FRS pension plan. And when it was started, it was an employee contributory plan, meaning employees were making employee contributions towards their FRS benefit. Then what happened was the legislature passed a bill that went into effect in January 1st of 1975 that said employees no longer had to make employee contributions, that the employers would be making the full contributions. And that remained into effect until July 1st of 2011, when the legislature, a bill was passed into law that said, once again, employees had to make employee contributions. So any paychecks that you received from July 1st, 2011 thereafter, you saw the 3% employee contributions coming out of your paychecks. Now, in about the 2000 legislative session, the legislature passed a bill that went into effect that created a second or alternative plan under the FRS, and that alternative plan was the FRS investment plan. So anybody that was initially employed with, or was employed with an FRS participating employer at that time or subsequent to that, was given an initial plan choice period in which to select which plan you wanted to participate in, whether you wanted to remain in the FRS pension plan or go over into the FRS investment plan. Now, once that initial plan choice period expired, you do have a one-time second election to switch plans while you're actively employed in an FRS credible or reportable position and you have not yet retired or entered into DROP. So you do have that one-time second election. But there are big differences between the two plans. The FRS pension plan is a defined benefit plan, meaning that your benefit under the FRS pension plan, once you're vested, is based upon the benefit formula. And the benefit formula is your years of service times the accrual value that you get for each year of service times your average final compensation. And when you retire under the FRS pension plan, you are guaranteed a monthly benefit for the rest of your life. Okay? Now, the FRS investment plan is a defined contribution plan, meaning that basically the employee contributions that you make into that plan, plus part of the employer contributions that are made on your behalf, go over into your FRS investment plan account, into the investment vehicle that you choose under the plan or that you defaulted to because you failed to make an election as to what plan investment vehicle you wanted to choose. And basically, when you retire under the FRS investment plan, the balance of your FRS investment plan account are your retirement monies. Okay, there is no monthly benefit. Those monies that are in your account are your monies for retirement. It is up to you to determine how you're going to make those monies last you over your retirement years. So there are huge differences. Now, the FRS pension plan is administered by the Division of Retirement. Okay? However, when the legislature created the FRS investment plan, they gave the responsibility or administration responsibilities to the Florida State Board of Administration, who hired a private company to administer the plan on their behalf for them. So we have two different state entities managing the two different plans. So when the legislature created the FRS investment plan, they also felt that there should be an educational component to the plan, basically to help members with plan choice. And that's what I'm really trying to get here with you at. If you are contemplating, okay, switching plans, okay, please do not take the advice of a friend. You may listen to a personal financial advisor that you're paying money to speak to. Or, even if you do that, I suggest that you call the FRS guidance line at 866-446-9377 to fully understand the differences between the two plans, because after you make that one-time second election, you can't come back. Okay? And this is your retirement, and if you make the wrong decision, it could impact you for the rest of your life. So make the most educated decision that you can by calling the MyFRS guidance line at 866-446-9377. Now, there is also the cooperative website between the Division of Retirement and the State Board of Administration. Remember, I told you the Division of Retirement has its own website, www.frs.myflorida.com, and I direct you to the Division's retirement website because everything there is applicable to you as an FRS pension plan member. But there is the cooperative website, the myfrs.com website, and everything on that website, all the pension plan information is on that website, but it's also got the investment plan information website. But if you go to the Division of Retirement's website later on in this presentation, I'm going to show you how you can easily navigate to the myfrs.com website. So one of the advantages that we have as FRS members, regardless of which plan we're participating in, is the state pays a fee to have the MyFRS guidance line, the EY financial planners, provide all FRS members, regardless of which plan they're participating in, free financial advice. So you, as an FRS member, can call the FRS guidance line and talk to a financial advisor at no cost. They don't sell you anything. They have nothing to sell you. They're just going to give you unbiased opinions. So I think that is a great benefit to all of us, and I would take advantage of that if I were you. Also on the myfrs.com website, you have the ability to chat live with an FRS financial planner as well, so they can assist you with all those things. Okay, now I work for the Division of Retirement, and the Division of Retirement, administers the FRS pension plan. So I'm no longer going to be talking about the FRS investment plan. But I thought if I didn't include this in this presentation, that I would be remiss in not providing you with this information because it's helpful to you, and I think should be incorporated in the presentation. So with that said, let's go back to the basics. In order to be eligible for a benefit under the FRS pension plan, you first have to be vested under the plan. And vesting just means that you have the number of years of service required to be eligible to receive a future benefit under the plan. And the vesting provisions have changed over time. When the FRS was first created, for members, it was, your vesting was either 7, 8, or 10-year vesting. And that was for all members that were enrolled prior to July 1st, 2001. And the number of years of service required to vest depended upon which membership class you were participating in. And then what happened was, effective July 1st, 2001, the legislature passed a bill which changed the vesting provisions to 6 years worth of service. So if you were enrolled prior to that under the old provisions and you were actively employed on July 1st, 2001, when the 6-year vesting provisions went into effect, you automatically fell under the 6-year vesting provisions. However, if you were previously enrolled under the old provisions and not actively employed on July 1st, 2001, when the 6-year vesting provisions went into effect and you were more than a year away from vesting under the old provisions, you had to return back to work for 1 work year in order to be eligible for the 6-year vesting. Now, for members that were initially enrolled, when I say initially enrolled, initially employed in an FRS credible position and therefore enrolled in the FRS, for members initially enrolled in the FRS on or after July 1st, 2011, they're subject to 8-year vesting. But everybody in this room, because you were invited to this retirement seminar, you were enrolled in the FRS prior to July 1st, 2011, so you are subject to the 6-year vesting. Okay? So the most important thing that each and every one of you need to know is what is and when is your normal retirement date. And why is that important? Because your normal retirement date is the point at which you were first eligible to receive an unreduced retirement benefit, and it's also the point at which you're first eligible to enter into the drop. So each one of you need to know when your normal retirement date is and when that occurs. Now, all of you in this room got an estimate of benefits, so we've provided you that estimate reflecting what your normal retirement date is. But for those that are maybe viewing this, the video recording of this, this is when you reach your normal retirement date. For all service classes, except for special risk class service members or service, your normal retirement date is age 62 or 30 years worth of service, whichever occurs first. Is that clear? Okay. So, for the special risk class members, their normal retirement date, is age 55 or 25 years worth of service, whichever occurs first. Now, you may be a special risk class member with special risk class service, and you may have service in another membership class, So if you're one of those particular individuals, you're going to have 2 normal retirement dates. You're going to have a normal retirement date for your special risk class service, and then you'll have a normal retirement date for your regular class service. So if you have 25 years worth of special risk class service, you're at normal retirement by years of service for your special risk class service, but you don't have a total of 30 years worth of overall total service to be at normal retirement for your other class service, or you're not age 62, so you're not at normal retirement. So when either one of those events occur, then you will have that normal retirement date for your other class service. Is that clear? Okay. Now, the other item, how a special risk class member can reach normal retirement, probably would not apply to anybody who in this room that was initially enrolled on or after January 1st, 1974. And the reason is because there is a active duty wartime military service provision that allows a member to purchase their active duty wartime military service during certain wartime military dates. They can purchase up to 4 years worth of their active duty wartime military service, and these dates are specified in your member handbook, but in order to be eligible to do that, you had to be enrolled in the FRS prior to January 1st, 1974. And we'll talk a little bit later about that, but if that applied to you, basically you could have a total of 25 years worth of special risk class service as well as military service that you purchased under the wartime military service provisions. So remember that if you're reaching your normal retirement date by age, then your normal retirement date is going to be the first of the month in which you turn that age. So if you're reaching your normal, you're turning age 62 or age 55, okay, say this month in October, then your effective retirement date or normal retirement date would be the 1st of October. Okay, is that clear? Okay, if you're reaching your normal retirement date by years of service, then it's going to be the 1st of the month following the month you attain the number of years of service required. Because your employer reports salary to the division once a month, and then you get service credit for that month. And then, retirement dates, effective retirement dates, and drop begin dates always occur on the 1st of the month. All right, so remember I told you that drop is, your normal retirement date is the point at which you're eligible to enter into drop. Now, K through 12 instructional personnel, as defined in section 1012, I think parens 2 of the Florida statutes, okay, that defines K through 12 instructional personnel, but basically they're able to go into drop at their normal retirement date or any time after their normal retirement date and still be able to participate in drop for a full 60 months, okay? But for the rest of us, unless we're eligible to defer our 60-month drop participation period, we would have to enter into drop at our normal retirement date in order to be able to participate in drop for a full 60 months. Okay, is that clear? So bottom line is, if you don't have the ability to defer your drop entry, and we'll talk about those people who can defer their drop entry, but if you're not eligible to defer and you're not K through 12 instructional personnel and you want to participate in drop for a full 60 months, then you would need to enter in drop at your normal retirement date, because your 60-month drop participation period commences at your normal retirement date and ends 60 months later. Okay, now you do have a 12-month window in which to elect to participate in drop, and that 12-month window commences at your normal retirement date, and you can elect to go into drop prospectively at any point in time within that 60-month drop participation period. But for each month you delay your entry into drop, okay, you lose an equivalent amount of months of drop participation. So if, for example, if I were eligible to go into drop this month, okay, October 1st, and I decided, no, I want to wait till January 1st, then I would only be able to participate in drop if I went in January 1st for 57 months, because my 60-month drop participation period commenced October, and then we had November and December, so I've already lost 3 months worth of drop participation. Everybody follow me on that? Okay, great. All right, so let's talk about the people that can defer their drop entry. Okay, if you have special risk class service and you're a special risk class member, and you reach your normal retirement date by years of service, meaning your 25 years of service of special risk class service prior to age 52, you can go into drop when you've got your years of service at normal retirement, or you can defer your entry into drop up until any month, up until the month in which you turn age 52. then the month in which you turn age 52 is your last opportunity to enter into drop if you wish to participate for a full 60 months. And it's also at that point where that 12-month election window occurs for you. Okay? Now, if you have other class service and you're reaching your normal retirement date by years of service at a very young age, prior to age 57, you have the ability to go into drop when you've got your 30 years worth of service, or you can defer your entry into drop up until any month, up until the month in which you turn age 57, and that would be your last opportunity to enter into drop and to be able to participate for a full 60 months. And it's also at that point where that 12-month election window commences for you. Everybody with me on that? Okay. All right. Okay, now elected officials, they also have the ability to defer their drop entry until the next term of their office. They become eligible while they're in their current term, and if they want to, if they can defer their entry into their next term of office in that same office, but they will only be able to participate in drop for a maximum of 60 months or the term of that succeeding term of office, whichever is less. Okay? And again, special risk class members, remember that if you have that dual normal retirement date, that you can also elect to go into drop at your dual normal retirement date as well. Okay, so what is drop? Everybody's very confused about what drop is, and drop is really very, very simple. Okay, when you go into drop, you are retiring under the FRS pension plan. Your retirement benefit is calculated at the time that you enter in drop, and you are allowed to delay the termination of your employment up to 60 months. So while you're continuing to work, your retirement benefit is going each month into your drop account, okay, on a tax-deferred basis, and basically, you're allowed to accumulate, up to 60 months worth of retirement benefits in your drop account on a tax-deferred basis while still continuing to earn a paycheck. So that's pretty awesome to be able to save that type of money in a 5-year time frame. So while you're participating in drop, okay, because you are a retiree, once you go into drop, you're no longer subject to paying the 3% employee contributions. So you'll no longer see the 3% employee contributions coming out of your paycheck. Also, while your monies are accumulating in drop, they also earn interest compounded monthly, giving you an effective annual interest rate or yield of 1.3%. And because all of you were initially enrolled in the FRS prior to July 1st, 2011, and you're all eligible to receive a cost of living adjustment on your retirement benefit each July, because you are a retiree, and while your retirement benefits are accumulating in your drop, each July you will get a cost of living adjustment on your retirement benefit. Okay? So what's going to happen when you terminate drop? About 3 months prior to your termination from drop, you're going to get a drop termination packet in the mail. And in this packet, there are going to be a couple of forms. There's going to be the DP term form, which is the form that you and your employer will need to complete and return back to the division that says, yes, I am terminating my employment on this date. Okay? Also in that packet is going to be a form that is called the DP-PAYT form, or the drop payout method form. And this form is the form that you will need to complete and return to the division to tell us what do you want us to do with all the with your drop accrual, with all those monies that have accrued in your drop account on a tax-deferred basis. And you have a couple choices here. You can choose to take a lump sum payout of your drop accrual, okay? But if you do, that immediately becomes taxable, and the division has to withhold 20% of it for the IRS, okay? And this also, you could be subject to additional taxes depending upon your income tax bracket. And if you're one of those individuals who was fortuitous enough to go into drop at a very young age, and you come out of drop and are taking a lump sum distribution prior to the calendar year in which you reach age 55, then you would be subject to a 10% tax penalty. Okay, now it would be age 50 for certain qualified public safety officers, and whether you fall under that category, you would want to consult your tax advisor on that. So maybe doing a lump sum distribution is probably not maybe the most advantageous for you thing to do. So you have another choice to do a direct rollover to another tax-deferred investment vehicle, like your deferred comp, over to your IRA, or even the FRS investment plan offers a vehicle that you can transfer the monies over into another tax-deferred account with them. One advantage to that is that if you do that, as long as you have monies under the FRS investment plan and that rollover vehicle, you will still be able to retain the services of the FRS guidance line and the EY financial planners. So the third alternative you have is to do a partial lump sum distribution and a partial rollover. Perhaps you wanted to buy that new car, take that Alaskan vacation, whatever you wanted to do, you could have that, those choices. But remember again, even on a partial lump sum, you're subject to that 20% withholding, and if applicable, the 10% tax penalty. Okay, the most important thing though is that when that form is sent out to you 3 months prior to your drop termination date, you'll want to get that back to the Division of Retirement as expeditiously as possible, hopefully prior to your termination date, so that the distribution of your drop monies can occur the following month. However, if you don't get that form back to the Division within the 60 days following your drop termination date, okay, the Division is going to make the distribution decision for you. And guess what distribution decision they're going to make? You got it, lump sum distribution. And you could be paying have to have the 20% withheld, subject to additional income taxes. And if you're below the certain ages when the distribution occurs, you could be subject to the 10% tax penalty as well. So it is your money, so make sure that you get all these things done appropriately. Okay, so now that you understand that going into drop, when you enter into drop, you are retiring and your retirement benefit is calculated, and all the years of service that you have, while you're in drop, and all the salaries that you are earning while you're in drop are not going to affect your retirement benefit because you went into drop, and when you went into drop, you're retired. So that is not going to change your retirement benefit. Your retirement benefit was calculated the moment you went into drop. Okay, so the benefit formula is your years of service times the percentage accrual value that you get for each year of service times, for everybody in this room, your average of your highest 5 fiscal years worth of salary. And when we calculate that formula out, that gives us your option 1 gross annual benefit, and dividing it by 12 gives us your gross monthly option 1 benefit. So what do I mean by the option 1 benefit? Okay, the option 1 benefit is the benefit that is payable to you for your lifetime. Once you pass away, there is no ongoing benefit to anyone. But there are 3 other benefit payment options that you may be able to choose from, but they're all based upon the option 1 benefit, so we have to determine that first. Okay? So let's talk about the different components of that formula. Your years of service. Your years of service are all the months of service that you had reported salaries, and all the years of service, years and months of service, plus it can be any optional service that you purchase under the system. So when I talk about optional service, these are just a few examples of optional service. You can refer to the member handbook on page 33 for all the different types of optional services that you may be eligible to purchase. But the first one is refunded service. And what do I mean by refunded service? Well, remember, the system is employee contributory now, and it was when it was first started. So what happened, a lot of people, when they were younger, they were contributing towards the plan, they terminated their employment, and they took a refund of their employee contributions when they terminated their employment. And when one takes a refund of their employee contributions, what they're doing is they're giving up the years of service that are associated with those contributions. So you can always buy it back if you return back to work for 1 work year, Okay, following having taken that refund, you can buy that service back by paying back the contributions that are due, plus 6.5% interest per annum back to the years in which those contributions were associated with. Okay? And if you need to inquire about your refunded service, you can probably look on your FRS Online account. You can call our contact center, or you can send in the form FR9 to us, and we will look up that information for you and advise you on that. Another type of service that you may be able to purchase is a leave of absence service. If you took a leave of absence that was authorized in writing from an FRS participating employer and returned back to work immediately following that leave of absence for 1 calendar month, you may be eligible to buy up to 2 years worth of leave of absence service. But in order to have that initiated and that cost determined, you would have to fill out Form FR28. Okay, then submit that form to that FRS participating employer that you were on that leave of absence with, and that they would complete it and return it back to the division, and then we would then determine your eligibility to buy that leave of absence service and then provide you with comparative estimates with and without the purchase of that service for you to make a determination whether or not you wanted to purchase that service. Now, there is the active duty wartime military service provision, which I referenced earlier in our conversation. And again, this provision is only applicable to those who were initially enrolled in the FRS prior to January 1st, 1974. Under this provision, you can buy up to 4 years worth of active duty wartime military service during certain wartime military dates that are specified in the member handbook. However, if that military service that you had is being used in the calculation of a military benefit, that would preclude you from buying that service under the FRS under this provision. Okay? There's also, if you're not eligible to buy your military service under that provision because you weren't initially enrolled on that date, you may be able to buy your military service under what we call the in-state, out-of-state provisions. And your military service wouldn't have to be limited to those certain wartime military dates. So what are the in-state, out-of-state provisions? Under this provision, it allows you to buy up to 5 years worth, cumulative total of 5 years of in-state or out-of-state public service, which can include military service and federal service. So in-state service would include any service that you had with a public employer in the state of Florida that wasn't participating in the Florida retirement system. It can also include colleges and schools in the state of Florida, as long as they were accredited by the Southern Association of Colleges and Schools. As far as out-of-state public service, it would be out-of-state service that you had with a public employer in another state. And like I mentioned, it could also include military service as well as federal government service. But one of the caveats to this or restrictions is that you had to be participating in a retirement plan with that in-state or out-of-state public employer, and you mustn't have taken a distribution of any employer contributions, and you mustn't now be eligible or in the future for a retirement benefit from that system, because that would be double dipping. So buying service under the in-state, out-of-state provisions is prohibitively expensive. I'm going to be quite honest to you. If you wanted to buy 1 year of service, it's going to cost you 20% of your first year's salary under the FRS. Minimum salary being used in that calculation is $12,000, and plus 6.5% per annum back to the year in which you were initially enrolled in the FRS. And you'll find on the members page of the website, and I believe also on the FR28 form, you'll see, or the FR30 form, excuse me, a breakdown of the approximate cost to buy each year of service. So basically, if you're interested in determining that service, whether you're eligible or not, you would complete the FR30 form, submit that to the in-state, out-of-state employer. They, in turn, would send it back to us. We determine your eligibility and provide you comparative estimates with and without that service. If it were your military service, all you would have to do is submit your DD-214. Now, any service that you're purchasing under the FRS, You can use monies from another tax-deferred investment vehicle and roll them over to the FRS as the successor custodian. And the form that you would need to do that and complete with your other investment plan provider would be the form PRO-1, which provides the instructions on how to roll over monies. So the second component of formula is the accrual value that you get for each year of service. Under the regular class service, if you retire up through age 62 or up through 30 years worth of service, you get an accrual value of 1.6% for each year of service. Okay, and that accrual value goes up if you go into drop or you retire at age 63 or 31 years worth of service. The accrual value that you get for each year of service is then 1.63, and then you can see at 64 and 32, it goes up to 1.65 for each year of service, and then at age 65 or 33 years, it maxes out at 1.68. Senior management people get a 2% accrual value for each year of service. Special risks get a 3% accrual value for each year of service or any service earned off after July 1st of 1974, and then prior to that it was a 2% accrual value. And then our elected officers get a higher accrual value. Judges and justices get a 3.33% accrual value, and all other elected officers get a 3% accrual value. All right, so the other thing is your average final compensation. Everybody in this room, it's going to be the average of your highest 5 fiscal years worth of salary. And the fiscal year runs from July 1st through June 30th, okay? And statute says that up to a maximum of 500 hours lump sum annual leave can be included in the calculation of your average final compensation if it's in your high 5, okay? And also, you can get a payout of any special comp time, lump sum comp time, if it was earned in the 11 months prior to your effective retirement date. That can also be included in your average final compensation. Now, statute says a maximum of 500 hours, okay? And I told you each agency has their own limitations. For state employees, okay, for career service people, it's a maximum of 240 hours annual leave payout, and for select exempt, it's 480 hours. But if you're one of those individuals that have been getting those 24-hour annual leave payouts each year, that may reduce the amount of lump sum annual leave payout that you can get, and you would want to consult the Human Resource Office at your agency regarding that. Now, I mentioned this, if you're going to do a service retirement, your agency is going to pay you out your annual leave. If you're just going to retire and not go into drop, but just retire, terminate your employment, and start getting your paycheck. But if you're going into drop, it's your choice whether or not you want to get a payout of your annual leave, okay? So you would need to tell your personnel office when you're filling out your drop paperwork whether you wish to do that or not, okay? So there is some confusion. People say, well, I'm not retiring at the end or the beginning of the fiscal year. You know, I'm not retiring effective July 1st. Will the salaries that I earn in the partial fiscal year impact my average final compensation, or will it be used? And the answer would be yes, if that salary is in your high 5 years. So here's an example of someone who is retiring effective January 1st, 2017, in the middle of the fiscal year. Okay, so they're retiring January 1st. They've got a half a year's worth of service credit in that year, and their salary that they earned in that year was $15,000. So will that salary be used in the ASC? Well, we have to figure out if it will or it won't. So what we do is we first annualize the salary that they earned. In other words, we take the $15,000 and divide it by the service credit needed, okay, and therefore the annualized salary, if this person had worked that full fiscal year based upon the salary they've earned thus far, that means that that salary would have been $30,000 a year, or $30,000 a year. all right? And that salary is higher than the prior fiscal year, the next highest fiscal year, and the next highest fiscal year, and the next highest fiscal year. And because it is higher, then that $15,000 will be used in the AFC calculation. So when now we've got 4.5 years worth of salary, okay? And so we have to go back into the prior fiscal year to get the remaining half a year of salary that we need. So in the prior highest fiscal year, the person had a fiscal year salary of $25,000. So $25,000 taking times 0.50, or the half a year service credit that we need, means that we would take $12,500 from that prior fiscal year. So then we would take all the years of service that we earn. We're always going to use 5 full years worth of salary in the calculation of the AFC. Taking that 5 full years salary gives us $137,500 for the total. And then dividing that by 5 gives us an average final compensation for this individual for $27,500. Okay? So bottom line is, if your last year's salary, even though it's a partial year's salary, is in your high 5, it will be used in the calculation of your AFC. So you needn't worry about retiring at the end of the fiscal year, because not everybody reaches their normal retirement date on July 1st of whatever year it may be. Okay, so now that we've gone through the entire benefit formula, let's just take a look at a few examples here. We got a person in the regular class who's reached normal retirement date by years of service. They've got 30 years worth of service. They're getting an accrual value of 1.60% for each year of service, and their average final compensation, for simplicity's sake, we'll say is $25,000. We calculate that out. That gives us a gross annual option 1 benefit of $12,000, and dividing it by 12 gives us a gross annual option 1 benefit, a monthly benefit of $1,000 a month, okay? So here's a special risk salary member. Okay, their normal retirement is 25 years worth of service in this particular case, and they're getting an accrual value of 3% and the same AFC, but their benefit option 1 is going to be higher because they're getting a higher accrual value for each year of service, and then this gives them a gross option 1 benefit of $1,562.50. Now here's a member who has both special risk class service and service in another class. So this person has 25 years worth of special risk class service, and now they have 5 years of regular class service, so they're at normal retirement because they have 30 years worth of service, you know, and then each benefit is calculated separately because they're different accrual values. So that's how it would work for them, okay? Now, you know, you can take your retirement benefit early. You know, we've all had those days and moments where we say, I'm through, I'm done, I'm out of here, okay? And they seem to become more frequent the closer you get, and believe me, I'm getting close. So bottom line is this: if you decide to take an early retirement benefit, you can do that, but your benefit is going to be reduced by 5% or a pro rata share thereof for each year that you are under normal retirement age. So if you are a regular class member and you're 61 years old and you've got 29.9 years worth of service, okay, your benefit's going to be reduced from age 62. Doesn't matter that you're maybe 1 month short of 30 years worth of service. The fact is you were not at 30 years worth of service. You're only 61 years old, so your benefit is going to be reduced by 5%. Okay? Make sense? Okay, so special risk class, the reduction occurs from age 55, and for all other classes it's age 62. Okay, so one of the most important decisions that you're going to have to make as an FRS pension plan member when you retire or when you enter into the drop is the selection of what benefit payment option you're going to take. And now this is really important because you should know what benefit payment option you're going to take before you submit the paperwork selecting your benefit payment option, because Once your first benefit check is cashed, deposited, or after your first month of drop participation, you cannot change your benefit payment option. That is in statute. So you could call me and say, Richard, I didn't know, no one told me, I want to change my benefit option. And if any of those three events, you've cashed that check, it's been directly deposited, or after your first month of drop participation, as much as I empathize with you, I don't have the statutory authority to allow you to change your benefit payment option. So know what benefit payment option you're going to select. Okay, so we've already talked about the option 1 benefit and how that works. Your option 1 benefit is based upon the benefit formula that we just went through, and that's how you get your option 1 benefit. Your option 1 benefit, as all benefit payment options are benefits payable to you for your lifetime. But under option 1, once you pass away, there is no ongoing benefit to anyone. Okay? Now the other benefit payment options, the options 2, 3, and 4, okay, are all actuarially equivalent to the benefit payment stream that you would receive under option 1. And we'll talk about how this works, okay? So let's talk about the option 2 benefit. The option 2 benefit works this way. If you're selecting the option 2 benefit, what you are saying is this: I'm going to take a reduced monthly benefit for the rest of my lifetime based upon my age at the time that I retired or entered into drop and my life expectancy. And if I should die within 10 years of my service retirement date or within 10 years of my drop entry date, my designated beneficiary will receive the remaining payments due me within that 10-year time frame, and then benefits to my beneficiary will then cease. So bottom line is, if you live beyond 10 years, okay, from your drop entry date or your effective retirement date, and then you pass away, there is no ongoing benefit to anyone, because it just was a 10-year time frame that provided you that benefit, but your benefit is a reduced benefit for the rest of your lifetime. Okay? Any questions on that? Okay. Yes, ma'am. Okay, her question is this: she just wanted a point of clarification that if she went into drop and she selected option 2, that her benefit would be a reduced monthly benefit for their lifetime, and that 10-year time frame commenced at the point in which you entered into drop. So you are correct that, once you've spent that 60 months or 5 years in drop, 5 years of that 10-year time frame have already elapsed. Okay, you are correct in that. Okay, all right, so now under option 1 or 2, okay, you can designate anybody as your beneficiary. It can be a friend, a charitable trust, a significant other, it doesn't matter. And some of you are probably thinking right now, well, why should I name a beneficiary under option 1? Because there's no ongoing benefit to anyone. Well, the fact of the matter is that you have been making employee contributions into the plan. And suppose you got your first benefit check and you were, ran into the bank to cash it, and you were so excited that you didn't look when you crossed the street and a car came and ran you over, okay, and you died, okay? So you got one retirement check, okay? If the total amount of employee contributions that you have made exceed what was paid to you in that retirement check, then we need to pay your beneficiary that difference. So that's why you need to designate a beneficiary. As a matter of fact, when you retire, you have to designate your beneficiaries for retirement. But as an active member, each one of you should have logged into your FRS Online account and designated your beneficiary as an active member in case you died prior to retiring, okay? So that we know who your beneficiary is, because that will expedite the process for your beneficiary. And if you want your spouse to be your beneficiary, as an active member, okay, even though you're going to have to redo it when you're at retirement, if you've listed your spouse, then it'll be an automatic option 3 if you never make it to retirement, if you die before retirement. Or, if it's not someone, and we'll talk about a qualified joint annuitant, then at least they would get a refund of your employee contributions. All right, in order to be eligible for an option 3 or 4 benefit, your beneficiary that you're designating has to be someone who is a qualified joint annuitant. And who's a qualified joint annuitant? Your spouse, okay, your parent, grandparent, or another person that you've claimed as a dependent on your income taxes, okay, can be a joint annuitant. Or it can be your naturally or legally adopted child under the age of 25 or over the age of 25 if they're physically and mentally disabled and incapable of self-support. So those are the only people that qualify as a joint annuitant. And if you don't have someone that qualifies as a joint annuitant, then you do not have an option 3 or 4 benefit. Okay, so let's talk about how the option 3 benefit works. And I'm not going to tell you right now how it works for a child because it works a little different for a child. So I'm going to tell you how it works on the option 3 benefit for everyone but a child. Okay, so with option 3, what you were saying is, I'm going to take a reduced monthly benefit for the rest of my life based upon my age at the time that I retire and the age of my joint annuitant and our joint life expectancy, okay? And if I should die, okay, then my survivor or my joint annuitant will continue to receive that same benefit for the rest of their lifetime, okay? Now, with a child and an option 3 benefit, it works a little different. If you name your child as your beneficiary, okay, and you select option 3 and you pass away, okay, your child, if under the age of 25, even though you've selected option 3, your child will receive the option 1 benefit up until the age of 25, and then the benefit to your child will then end. Okay, unless your child is physically and mentally disabled and incapable of self-support, then your child will continue to receive that option 1 benefit for as long as they remain physically and mentally disabled and incapable of self-support. Okay? All right, so that's how it works for a child. Now let's talk about option 4, and I'm not going to talk about how it works for a child. We're first going to talk how it works for all the other joint annuitants. Okay, when you select option 4, okay, and you need to be careful in selecting option 4 because your option 4 benefit initially will be higher than your option 3 benefit. And if your joint annuitant is someone who is really old and their life expectancy is really short, conceivably, initially, your option 1 benefit, your option 4 benefit could be higher than your option 1 benefit, at least initially. Okay? So this is how the option 4 benefit works. Basically, you're saying, I'm going to take an adjusted monthly benefit for the rest of my lifetime, and if I should die as the member, or my joint annuitant should die, then the survivor, which could be me or my joint annuitant, their benefit is going to be reduced by 1/3. In other words, they're only going to get 2/3 of what you were getting while both of you were alive. So you need to be careful to understand that if either you or your joint annuitant passes away, you or your joint annuitant, whoever the survivor is, the benefit is going to be reduced by 1/3 or to 2/3 of what you were getting while both of you are alive. And if this occurs while you're in drop, okay, that's going to reduce your drop accrual. So be aware that that can happen. Okay, is that clear? Okay, so in naming a child as your beneficiary under option 4, okay, you selected option 4, okay, and you pass away and your child's under the age of 25. Your child, even though you selected option 4, your child's going to receive the option 1 benefit up until the age of 25. Okay, and then the benefit will cease. Unless that child is physically and mentally disabled and incapable of self-support, then they will continue to receive the option 1 benefit for as long as they remain so. Okay? However, the danger in selecting option 4 is this. If you selected option 4 and your child predeceases you, guess what happens to your benefit? You're right. It goes down. It's going to your benefit, the benefit payable to you, is going to be 2/3 of what you were getting while both of you were alive. Okay, so be aware of the differences between the benefits. If you are having a problem deciding which benefit option you should select, that's a good call for the FRS guidance line. You call me, I can't tell you, but they can maybe help you work through that. Okay, so then that you understand your cost of living, your benefit payment options, let's talk about cost of living adjustments. Okay, what happened was the legislature passed a bill that went into effect July 1st, 2011 that said any service earned on or after July 1st, 2011 is not eligible for a cost of living adjustment. But all our service earned prior to that was eligible for cost of living adjustment. So when you retire, we have to determine what your cost of living adjustment is going to be. So this is how we calculate it. We take all your years of service that are eligible for the cost of living adjustment, meaning all your service earned prior to July 1st, 2011, and then divide it by the total years of service that you had at the time that you retired or at the time that you entered into drop, okay, and then multiply that times 3% to get your cost of living adjustment. So in this example here, this individual had 26 years worth of service that was eligible for the cost of living adjustment, and then he had a total of 30 years worth of service at the time he retired or entered into drop. So 26 divided by 30 times 3%, I think, give us a 2.60% accrual value. Now, if I use this as an example, but it could be, 26.5 years divided by 37 years, or 37 and a half years. So it's, we're going to use the years and the months. It's not going to be whole years in the calculation of your COLA. Now, I'm going to tell you this, the further out you work, the greater the denominator in that fraction gets, and of course, therefore, your cost of living adjustment is going to get lower, but don't let that dissuade you, because remember the benefit formula, your years of service gets greater, your accrual value may get greater if you're a regular class member, and your average final compensation may get higher. So it may behoove you to delay your retirement, but just be cognizant of the fact that your cost of living adjustment will decrease the further out you go. Okay, so applying for retirement. One of the gentlemen here, a very nice gentleman who got here just about as early as I did this morning, was asking, are you going to tell us about how to apply for retirement? I assured him that we were going to do that. Okay, so we encourage each and every one of you to apply ahead of time, okay? We'll accept your application up to 6 months prior to your effective drop begin date or your effective retirement date, okay? So applying for service retirement, meaning, retiring without participating in drop, the application is the form FR11, okay? Even though I told you that we like you to apply ahead of time, some people are procrastinators. If you were to terminate your employment today, October 10th, okay, and that would make you eligible for a November 1st effective retirement date. That would be your first eligible retirement date. But if your application wasn't received by the division, okay, within 30 days of your termination date, you have lost your eligibility to retain the November 1st effective retirement date, and therefore your application would be effective the first of the month following the receipt of your application. So make sure you get your application in timely. If your benefit was $1,000 a month and you didn't get your application in timely to get the first effective retirement date, well, then you may have just lost a month's or $1,000 $1,000 because you didn't get your application in timely. Okay, as far as drop is concerned, the application is the DP11 form. I've hyperlinked these in the presentations as well, which will be available electronically online on the members page of this website, as well as a video of this recording soon after this seminar. The DP11 is the application to participate in DROP, a retirement application, and the DPELE is a notification of election to participate in DROP, and is also your letter of resignation. Okay, so just know that you are signing your letter of resignation when you complete that document. All right, so those two forms have to be into us, okay, no later than the last working day of the month in which you wish to enter into DROP. So if you were eligible to enter into DROP effective October 1st, your application would need to be at the division no later, and that means in our hands, at our office, no later than the last working day of the month, state working day of the month, okay? So it would have to be in by then. If your application didn't come in, then your DROP would be effective the month in which it was received. Yes, ma'am? Uh-huh. Okay. She's asking me, she's eligible, and you and I are eligible the same day, December 1st, woohoo, to enter into DROP December 1st, okay? So if you are going to apply for DROP, the latest that you're eligible to go into DROP in December, then your application would have to be at the Division of Retirement on the last state working day of the month in which you intend to enter into DROP. So if you're intending to enter into DROP on December 1st, your application would have to be at the division on the last working day of the month in which you're intending to enter, December 1st. Okay? Okay, DC tells me the last working day of the month is December 29th. And if he's incorrect, blame him. I had nothing to do with it. Okay, thank you for asking that. I just want to make sure everybody knows. Yes, ma'am. No. Okay. No, I'm going to ask you that everybody hold their questions until the end, but the responsibility for you to apply for DROP or for service retirement is up to you. The division doesn't know when you're going to retire, whether or not you intend to enter into DROP, so it is up to you to make the application for retirement or make the application for DROP. Is that clear? Okay, yeah, no, we don't automatically send you the form. We have 600,000 members. We wouldn't possibly be able to keep up with all that. Okay, so the next form is the FRS 11-0 form, okay? And the FRS 11-0 is the option selection form. This is the form that you're going to tell us what benefit payment option you're going to select, and you're not going to submit that form until you know what benefit payment option you're going to select, because after that check's been cash deposited or after your first month of DROP participation, you cannot change your benefit payment option. The next form is the spousal acknowledgement form. This is the form that you're going to complete to tell us whether you're married or not. And if you are married and you're selecting any other benefit payment option other than 3 or 4, okay, then you're going to have your spouse acknowledge your option selection, because that's what statute requires. Now, your spouse doesn't dictate what option you must select. It's your retirement. You worked for it. But statute does say that the spouse has to acknowledge your option selection. If you're also going to have to provide the Division of Retirement with an acceptable form of birth date verification. So these are the things that you'll be wanting to pull together in advance. So you'll have to provide birth date verification for yourselves, and if you're selecting option 3 or 4, 4, you're going to have to provide as birth date verification for your joint annuitant as well. So what's an acceptable form of birth date verification? I'll tell you a few of them, but the BVR-1 form that I've hyperlinked in this document basically tells you all the acceptable forms of birth date verification. A valid U.S. passport, okay, would be acceptable, okay. A Florida driver's license that is issued in accordance with the Federal Real ID Act would be acceptable. And how do you tell whether your driver's license was issued in accordance with the Federal Real ID Act? If you look at the face of your driver's license adjacent to the image of the state of Florida, you'll see the gold star on your driver's license. If you're going to be submitting that as proof of birth to the division, please make sure you make an extremely good photocopy of any document that you're going to send to us, because you know, everything is run through our machines, and sometimes we get documents and we can't read them because the original copy was very poor. So any documentation that you send in, please put your last name, first name, and the last 4 digits of your social so we can properly correlate it to your record. All right. So also the birth certificate from the state in which you were born or other governmental agency would be acceptable as well. The other thing is, if you're selecting option 3 or 4, okay, and you're designating your spouse as your joint annuitant, you are going to have to provide us a recorded copy of your marriage certificate. And what do I mean by recorded copy? I mean the copy from the courthouse, okay, or the copy from whatever governmental agency. If you were married in Florida, it'd be the Department of Vital Statistics or the Florida Vital Statistics area with the Department of Health, or wherever from whatever state you were born in. So that is the copy that we need. And again, if you submit that in, remember to put your last name, first name, and the first 4 digits of your social so it'll be properly correlated to your file. So these are all the things that you need to do in preparation for retirement. The reason why we require the birth date and the marriage certificate is because, first of all, your benefit is based upon your age and the age of your joint annuitant at the time of you retire, and in order to be a joint annuitant as your spouse, you have to provide as proof of marriage. Okay. All these forms are available on the Division of Retirement's website, so when you go down to the members page of the website, click on forms, and then at the top of all the forms listing, you will find the drop retirement forms packet that has all the drop retirement forms that I just referenced individually combined into one packet along with all instructions, as well as the service retirement forms packet. If you're not going to retire through drop, you're just going to do a straight service retirement. Now remember, your employer needs to sign off on all this paperwork. So this lady here, I was kind of surprised that her agency had told her that we'd mail her the forms. We don't. Okay, so you need to I can only stress this enough. If you need information about your retirement benefit, you need to be contacting the Division of Retirement, okay? They're the ones you should be getting your answers from. So we've got your estimate here, and I'll talk with that lady at the end of the presentation. Okay, so once you retire, okay, just about, once you retire or once you terminate drop, right before you get your first benefit check in the mail, you're going to get a retiree packet in the mail. And in this packet, there are going to be a couple forms. The first form is going to be the W-4P form, which is the tax withholding form, the form that you're going to tell us how many tax withholding allowances you want taken for out of your retirement benefit. The second form, which none of you state employees need to worry about, is the direct deposit form, unless you're changing your direct deposit, because you, as a state employee, will have your retirement benefit check deposited directly into the same account your paycheck was being deposited into. But for anybody who is not a state employee, okay, then you would have to fill out the DFS, or Department of Financial Services form, to establish direct deposit. Now, basically, these two things can be done directly through your withholding allowance, as well as setting up direct deposit can be done directly through your FRS Online account. So if you're going to do a service retirement, and you submit your application in, the division will acknowledge your application, and as soon as we do that acknowledgement, then this means that you can log into your retirement account and set up your tax withholding and your direct deposit. If you're a drop participant, right after you once you get your drop termination packet, you should be able to log in and set up your direct deposit. And then right before you get your first retirement benefit check at home, you should be able to log in and set up your tax withholding as well. Now, the other form in that packet is called the Health Insurance Subsidy Form. And there is an extra benefit that you can get. It's called the Health Insurance Subsidy, and basically you can get an extra $5 per month for each year of service that you had up until the time that you retired or entered into drop, up to a maximum of 30 years of service. You get an extra $5 per month for each year of service that you had at the time that you retired or entered into drop. But you can't get this benefit until after you have terminated your employment. So you can apply on the HIS-1 form to get this health insurance subsidy, and it's just certifying that you are maintaining health insurance coverage after you retire. Okay? All right. The other thing that we need to talk about is reemployment after retirement. Okay. There is a termination and reemployment limitation period following the 12 calendar months of your following your drop termination date, or in the 12 calendar months of your service retirement. When you retire or terminate your employment, you can go work for any non-FRS participating employer or any private employer, and it will not affect your retirement benefit. But if you do go back to work for an FRS participating employer during this 12-month time frame, it will impact your benefit. So during the first 6 calendar months of your service retirement, or in the first 6 calendar months following your termination date from drop, you cannot work for any FRS participating employer in any capacity, because if you do, you will void your retirement and have to repay back any and all benefits that you received. And if you were participating in drop, that will void your drop and you will owe those monies back. So you want to make sure that you never go back to work for an FRS participating employer in that 6-month time frame. And even if you're contemplating to go back as an independent contractor, you better be contacting the Division of Retirement and speaking to our enrollment section to have them review that independent contractor status, because if it's later found out that you were not an independent contractor, that would void your retirement. So don't even contemplate that without first contacting the Division of Retirement. Now, in the subsequent 7th through the 12th calendar months, you can go back to work for an FRS participating employer, but if you do, statute says you can't simultaneously receive a salary and a retirement benefit from a state-administered retirement system, but you can't receive a salary from an FRS participating employer during that time frame. So any of the months that you are working for an FRS participating employer during that time frame, you will have to suspend and repay any of the benefits that you receive for any of the months that you were working during that time frame. Once the 12-month time frame has passed, on the 13th month you can go back and work for any FRS participating employer, and it will not impact your retirement benefit. But however, just keep in mind that if you do come back to work, renewed membership as an FRS pension plan retiree is closed. It closed effective July 1st, 2010, so you will not be able to participate in any state-administered retirement system, which includes a pension plan, including the State University System Optional Retirement Plan, the Community College Optional Retirement Plan, as well as the FRS plans. Okay? Forfeiture of benefits, I always hate talking about this, but and you all look on nice people, but sometimes desperate people do desperate things that really, with any thought, they wouldn't do. But basically, if you commit any of these crimes, which are usually felonies against the employers, which are listed in these section of statutes and are also listed in the employer handbook, if you commit any of these crimes and you're convicted by a court or a competent jurisdiction of any of these crimes, basically you will forfeit your benefit. So don't commit the crime or do anything until you have totally terminated your employment. Okay? So again, we're just going to go over to the Division of Retirement's website. It's located there. We're going to go through this quickly. The members page we talked about, you can find the FRS quick clips there, the forms there. You can find the video links there to this recording as well as other recordings. You can find all the publications. That's where we talked about. You can get the retirement guides. Legislation, any legislation, we're having legislative session begin in January, so anything that may impact retirement benefits will be listed there. The laws and rules, Chapter 21 and Chapter 60S of the Florida Administrative Code can be found there. And I mentioned, the myifrs.com website. You can easily navigate it to there by clicking at the bottom icon on the lower right of the home page. And the most important thing is your FRS Online account. Each one of you should be logging into your FRS Online account. This is the only way you're going to get your member annual statements and other things, and you're going to need this as a retiree, because as a retiree, you're not going to be mailed a benefit payment stub. The only way to get your benefit payment stub is to log into your FRS Online account. So if you click on the FRS Online icon, that's going to take you to the login page. If you've never logged into your FRS Online account before, then click where it says click here. Okay, and it's going to ask you a bunch of information and security questions about yourself to enable you to log in and set up your username and profile. It will require you to use the MyFRS PIN that you got in your initial plan choice, and I know that you all know where you put that. Okay, all right. I have that same location. So bottom line is, don't worry, go ahead and start the process and log in, and you have the choice to request a PIN. Okay, it'll take 10 days for you to get it in the mail, but as soon as you get that PIN number in the mail, then you can log in and establish your FRS Online account. Now, if you attempt to log in and it says it doesn't recognize your Social Security number, don't panic. We haven't lost your years of service. It just means that you previously logged in to FRS Online and established your own username and password, and therefore it's not recognizing the information that you gave to them. So all you need to do is click at the link at the bottom of the page. It says forgot my username and password, and then it'll default back to the basic information and ask you the security questions that you answered when you initially logged in, and you should be able to get access to your FRS Online account. So when you've got access, remember your username is what you create. It's totally up to you. Your password can be any password that you create as long as it fits the parameters of what they require. Just remember that passwords are case sensitive, so remember to enter it in like that each time. Once you log into your FRS Online account, every single member, regardless of your status in the FRS, whether you're an active member, a retiree, or a drop participant, you're all going to have the MyFRS modules. The profile settings is where you can update your email address, and each of you that are approaching retirement should be putting your personal email address in there rather than your work email address, so that you are corresponded with at your home once you have left employment. This is communication preferences. This is where you can accept, select electronic notification, and your mailbox would be any notifications we have sent to you via email. So those are all located there. Member services, this is for all active members who have not yet retired and not yet entered into drop. Basically, you can go to your history summary and look at your service by fiscal year. Do you have a full year's worth of service credit each year? Were you on a leave of absence? How come I don't have a full year's worth of service credit? So look at your history summary. Service summary is just the summation of the total years of service that you have as of of the last payroll date reported by your employer. Your beneficiary, as an active member, this is where you would designate your beneficiary in the event that you should pass away while actively employed prior to retiring. Member annual statements, this is where you're going to get your member annual statements. Current estimate, I'm done, I'm out of here, I want to know what my estimate will be if I retire effective November 1st and terminate it today. That's where you can get that estimate from. Or if you're one of those people who has like a wide range of time in which to defer your drop entry, you can go and create estimates for differing dates. You know, should I go on a drop? Should I not go on a drop? Let me see if I worked another 5 years, how that'll impact my retirement benefit. So you can go right there and do that. Once you go into drop, you're no longer going to have member services. It's going to be now drop services. And when you go into drop, we're going to finalize your drop and we're going to mail you your drop accrual. And you probably all will file that drop accrual in the same place you've filed your MyFRS PEN, right? Okay, and so then you're calling the division asking, where is my drop accrual? Well, you can go right into your drop account and pull up your drop accrual going under the drop information. If you have a beneficiary under option 1 or 2 and you're in drop, you can go in and change your beneficiary. If you get mad at them and say, well, I'm going to leave somebody else as my beneficiary, you can go ahead and do that. Option 3 or 4, you can't do that because you'd have to contact the survivor benefits section, and if you change your beneficiary under option 3 or 4, that's going to result in a recalculation of your retirement benefit because there would be a different joint annuity with a different age and etc. So you may not want to do that. You can only change it if you're under option 1 or 2. All right, so let's talk about now that you're retired. You exited drop or you just went into straight service retirement. Your account information is where you're going to view all your monthly statements. You can change your tax withholding. And your beneficiary, again, with option 1 or 2 can be changed there. Your address. While you're working, your employer reports your address. So if you're moving, it's your responsibility to inform your employer that your address has changed. If we've got the wrong address, it's because you didn't tell your employer that your address has changed, because the address comes in through the payroll report. So that's why we would always direct you there. But as a retiree, you're responsible for keeping your address up to date. And if you don't keep your address up to date, it's a possibility we could stop your retirement benefit. So keep your address up to date once you do retire. If you need to switch your direct deposit, you can do that there through your FRS Online account. And let me just advise you, signing up for direct deposit via your FRS Online account is a lot easier because you can do it. You don't have to mail a copy of the Department of Financial Services form along with a copy of your driver's license to them. You can just simply log into your FRS Online account and it's a done deal. Okay? And that's pretty much it as far as my presentation. I'm sorry it took so long. These are the contact numbers to the division as well as our email address. And again, please contact us with any questions. So I am going to wrap it up here. Okay? All right, I'm just going to give like about a 5-minute Q&A question to open up to the room.